everyone. Here we are to give you a recap of the month of June. It's hard to believe that we're halfway through 2026. First of all, on the economic side, as you may recall, the third quarter GDP in the U.S. was up 4.4% annualized. The fourth quarter, again, because of the government shutdown, was up only 0.5%. Then you had the first quarter. Those numbers were recently given the final estimate of 2.1% growth, and now we're in this, just finishing the second quarter, where we have a 2.5% growth rate. The next update will be in early July. Fed fund futures, in terms of the probability of a 25 basis point increase at the July 29th meeting, which is coming up in July, 30% odds according to Fed fund futures. 59% odds of a 25 basis point cut or more at the September 16th. Then you go to 68% for the October 26th meeting. And then finally, December 9th, you finally get up to 77% chance. So right now, the odds are for one interest rate increase of 25 basis points. Geopolitical choppiness continues. Talk of a ceasefire, talk of violation of ceasefire. You've had some kinetic strikes, of course, exchanged in recent days. We've had this issue of private credit redemptions, where they've had to slow down the pace if someone wants to redeem their partnership interest in a private credit fund. You had the SpaceX IPO, $135 a share. The thing ran up well over $200, as you know. It's backed off to around the 150 level. Kevin Warsh, you had his first meeting as Fed chair. No change in interest rates, monetary policy right now. However, some big changes, I think, are going to be unfolding during his tenure as Fed chair. I'm talking about the formation of 5 committees to study various aspects of the communication and implementation of Fed policy. Speaking of communication, I think you're going to be hearing less chatter and less pronouncements from Fed officials. And Kevin Warsh himself declined to give a dot plot, where that's where the Fed officials estimate GDP growth, inflation, and unemployment. And you're going to see, I think, less of that going forward, and more moderate flow of information and forward guidance from the Fed officials. The Bank of Japan raised their interest rates 25 basis points during the month to 1.00% policy rate. That's the highest in Japan in 30 years. Now, when you put all this together, the S&P 500 during the month of June, as you're closing in on the last day or so, was down 3%. It's up 7% for the year. NASDAQ had an even worse month. NASDAQ, and that's your tech-heavy companies, down 6% for the month, and it's up 8.8%. Where we've talked about this before, you're seeing a broadening out of the stock market in the U.S. The Russell 2000, which is the small and mid-cap companies, was up 3.1% last month. And it's up 21.3%. The bank sector continued to show investor interest. Oil down 20.8% for the month. So you see expectations of the Strait of Hormuz perhaps being open to some degree. Oil down 28.8%. It's up 20.6% year to date at around $87.36. Per barrel was the end of May. End of June was $69.23. So that's that 20.8% drop. Gold also down 10.6% for the month. Gold, $4,078 per troy ounce. And gold is down 5.7% year to date. Now, two-year treasuries closed at 407. The previous month, they closed at 3.98. So they were up 9 basis points. So far this year, the two-year is up 60 basis points, and that's consistent with the expectation of the Fed actually going to raise interest rates later on this year. The 10-year Treasury was down 7 basis points for the month to 438 versus 445 at the end of May. It's up 20 basis points from 4.18 at the beginning of the year, and your 30-year Treasury was down 12 basis points to 4.87%. Versus 4.99% at the end of May. It's up only 3 basis points versus 4.84% at the end of the year. Let me just say, in recent weeks, this Magnificent Seven has been having some difficulties. You're having Google is up only 7.8% for the year. As we closed out the month of June, Google was down 8% in the last week of the month. They had that big share offering. You're seeing competition from China, and you've seen very important scientists and technicians and computer coding experts, real geniuses, have been leaving Google. Not everybody, but there have been some high-profile departures. Meta's down 17% for the year thus far. Microsoft is in a bear market. It's down 23%. It hit a 52-week low in the last week of June. NVIDIA is up only 3%. The dollar is up 3% thus far this year. Now, when we pull all this together, we're saying in this kind of volatile up and down markets, and you're seeing this broadening out, this is an ideal time to take a very careful look at alternative investments, private equity in particular, where I think this IPO of SpaceX has basically excited many people about potential exits, and you're going to see another flow of initial public offerings, and that, I think, is creating a positive environment for exits in the private equity space. Private credit, we continue to recommend discernment, discrimination, and discipline and diligence in evaluating private credit holdings. We wish everyone a great month of July and look forward to catching up with you very soon.